Hey, ladies and gentlemen, Corey Linton, aka Bunky Brewster here. Just wanted to talk to you a little bit about mortgage protection and four things that you really need to know before you ever take out a policy with your lender. Okay? Now, mortgage protection, a lot of people have no idea what mortgage protection is, but mortgage protection is actually a life insurance policy that is designed to pay off your mortgage, your note to the lender, should you pass away or die before the end of your mortgage. Now, if you have a spouse and they work from home, or maybe you've allowed your spouse to be that stay-at-home parent, that's great. But what happens is that you're operating under one income. So mortgage protection is actually a very necessity or very needed tool, let me say, and lifesaver, a band-aid, if you will, should something go wrong with you if you're the main breadwinner. Okay, so because the amount of coverage can actually decrease as you pay your mortgage down, it should actually cost a little bit less than your normal whole life or term insurance. Okay, so here's the first thing that you need to know. Number one, you need mortgage protection again because you're protecting your family, okay, in case, God forbid, should something happen to you. And in the event of your premature death, the balance of your home is paid off. And that helps secure the ownership of your home and protect your family at the same time, because that's what we do. We all get up every day hoping and praying that we are working to protect our family, right? So again, that would relieve the financial burden to them. God forbid, again, something happened to you and you die. Now, what affects the cost of mortgage protection? Well, there are several different things that can really affect the cost of mortgage protection. The first of those is being your age, of course. Insurance is always cheaper and cheaper to cover when you're younger. Okay? General state of your health is an important factor. The better healthy you are, the more healthy you are, the better your health. Then, of course, the less that the price is going to cost you. Now, if your health is not good, you may see a price increase as a result of that, but it'll be listed in your exclusions. The other thing that you really want to be concerned about in affecting the cost is, are you a smoker or a non-smoker? Do you chew tobacco? One thing about smoking and tobacco use is that your coverage, your policy, can nearly double in cost if you're a smoker or a tobacco user. So if you've given up the products within the last 12 months, you should always look at the price that you're currently paying right now. So that's a tip for you out there. If you're already covered and you've quit smoking in the last 12 months, 6 to 12 months, then you need to go back to the insurance person, company, whatever, and say, hey, I'm no longer a smoker. Can we look at this coverage and see if there's anything that we can do better? So whether or not that you use tobacco is a huge factor into the cost of that. Your family's health history, believe it or not, if you've had, a poor family health history with your mom, dad, aunts, uncles, it could essentially affect the cost of your own mortgage protection. Sometimes that's just genetics and DNA, and we can't help that. The amount of life cover required or mortgage protection required. Is that mortgage a $100,000 mortgage? Is it a $200,000 mortgage, etc.? So the amount of the coverage is also a factor in what this will cost. And then again, the number of years, because you can make sure that you get this extra coverage provided for you on the mortgage for just the amount of years that you actually have the mortgage. So you'll want to check in, how many years do I actually need to cover this mortgage and how expensive is that going to cost? So that's the other factor. Now, do I need to take out mortgage protection policy with my lender? No, absolutely not. You don't have to take out the mortgage policy with your lender. A matter of fact, 9 times out of 10, banks try to use their own insurance, which is much like some of the mom and pop places, the Duck Quacker, state bureaus and farm states and stuff like that, we'll say, will be really tricky with the verbiage. But again, if those big banks have their own in-house insurance, then they're probably not looking out for you on the affordability and the cost. So we always say that it makes sense to shop around for comparative prices. I'm actually a broker. I don't work for any one singular company. I work for multiple companies. So anytime you're shopping this around, check 2 or 3 different sources because you might accidentally get way more coverage than what you need for a lot better price. And as always, thanks for watching the Let's Talk Y'all mini-series today. Again, my name is Corey Linton. If you need any information about insurance, mortgage protection, annuities, financials, notary in the state of Mississippi, there's a plethora of services that I offer here with Lindsay and Associates. All you have to do, leave a comment below and I'll be glad to send you a message so that we can connect over the phone or over a Zoom call. Not everything has to be done in person anymore, guys. So once again, thanks for listening to me today as I shared why you need mortgage protection. And until next time, see y'all.